FedEx stock is dropping like a rock right now, and there's a couple of reasons I'm watching this one very carefully. Rather like Nvidia is a bellwether stock for tech, meaning as soon as something happens at that company, the market watches to see what's going to happen to the rest of the tech industry. Walmart's another one. As soon as something happens there, the market asks what's going to happen to the rest of the retail industry. FedEx is basically that for most other segments. With $88 billion in annual revenue and operations in 220 countries, handling about 16 million shipments a day, FedEx is everywhere, and it touches every kind of economic agent, from the consumer who's ordering from direct-to-consumer brands and getting packages shipped to their home, to the industrial and manufacturing sectors. So it has a really unique global point of view. Now, in its latest earnings, FedEx revised its outlook for 2025 downwards for the third quarter in a row, and the market does not like that kind of change with that kind of frequency. Management also specifically called out weakness in the industrial sector, and FedEx pointed out anecdotes that its own clients had gone to it and said they are expecting to have to raise prices, meaning FedEx is getting signals that inflation is going to be sticky. Now, there's a lot going on at FedEx internally. It's got a $2.5 billion expense reduction program, and there is chatter that it's going to spin out its freight business, which is about 10% of its revenue. But even cutting through all that, it's because of its global reach, the diversity of its operations, and the fact that it is so globally exposed to everything from the impact of tariffs to where interest rates grow is why FedEx is going to continue to be one that I'm watching for the macro outlook.